Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrina with The Street, and together we bring you the Morning Call Express. Monday's trade was a bit slow, a little bit choppy, but what traders are really focusing on is the two-day FOMC meeting and, of course, those key NFP numbers on Friday. Jobs is what everyone is focused on.
Yes, and I think that was day 12 of this kind of digestive, slow trade we've seen since that Wednesday address by Big Ben. But overall, I think the digestion has been good, and again, maybe this Tuesday, Wednesday meeting / Friday will be the catalyst to finally get that 1700.
So do we still have some room to run here? Because the S&P, it's still continuing to have the upward grindy trend.
Well, if you look here at the chart, take a look at the SPX, you will see that, we did have that tradable move to the downside from the May 22nd top all the way down to the moving averages, and from here, you had your bounce, digested, and this was really your advertisement to get back in when we took back the 50-day, and then here we are in this upper range. Okay, I know there was a small micro sell signal that we talked about when we broke this small ascending channel, but overall, no real downside, holding above the 21-day moving average. I think short-term traders will stay more, bullish bias if we could just continue to stay above 1670. And then at some point, if, the Fed doesn't throw a curveball at us, which I don't think he will, we could see north of 1700. It's just a matter of when.
Moving along to the sector spotlight, we're going to focus on the industrials today, kicking it off with this sector ETF, the XLI. This has been the second best performer in terms of earnings this quarter. Reason being is European PMI came in real strong, and traders and investors are warming up to that European theme again.
Yeah, and money's been rotating all year, so why not go with that sector if you believe in that thesis? And if you look here at that, that ETF, looks really good. You had your strong move above this downtrend. Yes, you could have made some cute money right here when it broke below the 45.27, but overall, at the 8-day, above the 21-day, this sector looks like it's in their game. It's not showing relative weakness to the market. It's looking actually in line, if not a little bit better.
And speaking of outperformers, let's take a look at Honeywell real quick. This is a name that we're continuing to accumulate aggressively in Action Alerts Plus. Kramer and Stephanie really like this theme for 2013. These conglomerates that have exposure to aerospace, the industrials, that's really what we're focusing on.
Yeah, and this one has had a nice trend. There's been spots to be a little bit more heavy or light. You look here at the chart, you'll see you did have a small, sell signal right there, which was at a peak after a big run. But overall, above the 8 and 21-day, hovering in here, I think you could trade versus 81. Okay, if it stays above 81, I think they're going to get a new high trade once it absorbs this negative candle, which it's been in the process of doing, just like the market.
In the trenches, we're going to focus on commodities and the macro theme, looking at GLD like we always do, but also the VGK, which is the European ETF. Again, we're hearing more chatter. We're hearing more traders and investors warm up to that European theme as we think we've turned the corner there.
Yeah, and with the metals, it was a great short for the majority of the year, but then once we had that blood on the street lows, which we talked about on July 28th, it turned into a nice bounce play. And if you look here real quickly at the GLD, spots for adjustments, right here, 161 was a sell signal, 150 sell signal here, and then this was your nice bounce off the lows. So I would say traders are still looking at this in a constructive fashion. The longer it stays above 126, the higher the probability maybe it continues above 130 into more resistance, but just be careful. On Wednesday, Fed days, they typically haven't been a good spot for people to be in gold. Let's see what happens on Wednesday there.
And finally, we're going to take a look at quick hits today and focus on high beta names like Tesla, like in Amazon. Let's be clear here. We've seen quite a run in these because we're seeing traders and investors chase performance, and these are the names that are getting the bid off of that. Tesla, for example, BMW came out yesterday with their electric car. It could be serviced anywhere. They have multiple dealerships, and it's more affordable. And Tesla hits new highs.
Well, you know what? It's almost like when a lot of restaurants go to a block, it validates the block that it's for restaurants. I said when everyone's like, oh, we got to sell Tesla, I'm like, technically it's acting well. That just validates that market that has huge growth. And if you look at the chart here, technically it's been unbelievable. Starting from last earnings here, it's been following this nice trend above the 21-day. Lots of different, even here, you had a sell signal that became a buy signal that now is at 2013 highs. We put a projection above 140. I think this stock, to learn how to trade on every time frame, because it trades and it moves, and I do think there's a lot of room. And by BMW entering the electric car market, I just think it validates that there's going to be room there and it's not going away.
That's a great point. And finally, let's take a look at Amazon real quick, because this is another one. How much higher can it go?
Well, they're actually, they're doing what people want them to do. They're hiring, they're spending money versus buying back stock.
Unlocking that shareholder value and growing.
Exactly. And Amazon, it did pull back a little bit yesterday, but, we've talked about the different buy areas. One was around 285. You had a nice pivot there. I would say, as long as it stays above this area, it's in the game for higher prices. We talked about other opportunities too. And finally, Apple gave us a really nice micro trade yesterday. We talked about this lower area, the gap after earnings, buying some here, adding some here. Now, I think the door is open to maybe even 490 to fill that gap. So overall, lots of things to do over the summer versus just trying to be a naysayer, doomsday guy declaring like he's dead.
Well, you know what? We have a lot to look forward to this week. Again, the FOMC and the non-farm payrolls will be back with Scott on Thursday morning to get you set up for the NFP number. Have a great day, everybody. Catch Scott at the end of the day as he wraps up the charts for you on Real Money Pro, Options Profits, and T3Live.com.